All right, ready to dive into the world of Forex trading.
Buckle up.
Our source material this time is Making Profit with Forex Trading. This deep dive is like your express lane to understanding this market.
Whether you're here to, make some smart trades
Sure.
or just want to kind of decode the financial news.
Exactly.
Yeah.
We've got you covered.
Okay, so full disclosure. I try to keep up with the market, but sometimes I feel like I'm missing key pieces of the puzzle. You know what I mean? I get the basics of stocks, like buy low, sell high, and all that.
Right.
But when it comes to Forex, I need that aha moment.
Sure, I get it. I think a lot of people feel that way, honestly.
Yeah.
It's like,
Yeah.
you've got the car, right? You know how to drive.
Yeah.
But Forex, it's like someone just dropped you into a Formula One race.
Whoa.
Yeah, you need way more precision. You got to understand what's happening under the hood.
Yeah, that's a good analogy.
Right.
Okay, so where do we even begin with that? What's the first upgrade I need to make in my thinking to really get Forex? Okay, well, think of it this way. In the stock market, you're mostly dealing with individual companies.
Right, right.
But with Forex, you're playing with entire economies represented by their currencies.
Well, okay, so instead of betting on Apple or Tesla, I'm betting on the US dollar or the euro.
Precisely. You got it.
Okay.
And that's where understanding currency conversion becomes really, really important, because your profit isn't just whether a currency goes up or down.
Right.
It's all about how it moves relative to another currency.
So it's not just buy low, sell high.
Right.
It's more like buy low in one currency, sell high in another at just the right time.
You're catching on quickly. That's exactly it. But to do that effectively, you have to get how these exchange rates are expressed.
Yeah, because I can't just eyeball it and guess, right? I need some hard numbers.
You need tools that are as precise as a surgeon's scalpel.
Okay.
That's where terms like cross rates and pips come into play.
All right, break those down for me. What are those and why should I care?
So a cross rate is basically a ratio showing the relationship between two currencies.
Okay.
It's how much of one you need to buy one unit of the other, and a pip. That's the smallest unit of measurement you can imagine in this world. The tiniest change in a currency's value.
So, if I'm trying to profit from those small shifts, I need to be aware of even those tiny movements. Pips matter.
Oh, they matter big time, especially when you're trading larger amounts, Imagine making a trade where a 1 pip difference means hundreds or even thousands of dollars.
Wow. Yeah, that puts it into perspective. Okay, so I'm starting to see how Forex is a whole different game in terms of the precision needed.
Yeah, absolutely. And this is where the 245 nature of Forex really kicks in, because these currencies are constantly being traded all over the globe, right? Those pips, they're constantly fluctuating, so that creates opportunities, but it also means you got to be watching constantly.
So it's like the stock market on overdrive.
Pretty much.
But with all these moving parts, how do you even keep track? It sounds kind of overwhelming.
Well, that's where market statistics become your best friend. And the good news is you don't have to analyze every single piece of data yourself.
Yeah.
There are experts out there, analysts and chartists.
Yeah.
They make sense of all this data. They'll present it in ways that are easier to understand, say, candlestick charts.
So I can actually leverage their expertise. That's a relief.
You can. Think of it like having a whole team of navigators helping you chart a course through this crazy financial sea.
Okay.
Right.
That's starting to make me feel less like I'm going in blind, which is good. But even with all this information, it seems like sometimes the market just throws you a curveball out of nowhere.
Oh, you're absolutely right. Unexpected things happen all the time. And that's where understanding concepts like devaluation and revaluation can really help you navigate those rough waters.
Okay, let's talk about those. What are they, and why should I be worried about them?
So picture this. A government just decides to intentionally change the value of its own currency. That's devaluation or revaluation. And let me tell you, it can send shockwaves through the whole Forex market.
Yeah, our source mentioned the Russian ruble crisis back in '98. That was a big one, right?
Yeah.
What exactly happened there?
Well, the Russian government, they announced a devaluation of the ruble, and it triggered a complete panic. People lost confidence in the currency, the value plummeted, and it was a huge reminder of how quickly things can shift in Forex and why Understanding these government actions is like so crucial for traders.
So it's like the government can just suddenly change the rules of the game.
Yeah.
I need to be ready for that.
You got to be prepared for sure. It's not just about watching trends. It's about understanding the bigger economic and political stuff that can really influence those trends.
Okay, I see. So we've talked about the precision you need in Forex, the constant movement, the experts helping us make sense of the data, and even those curveballs that governments can throw. It's a lot to take in.
It is.
But before we move on, I got to ask, with all this potential for things to go wrong,
Yeah.
are there any safety nets in Forex?
Yeah.
I mean, it's a constantly moving target, right?
That's a really smart question, and it leads us to this super important topic of risk management. Because, yeah, Forex has huge profit potential, but there's inherent risk, too. And that's why smart traders use specific tools to protect themselves.
Okay, so what are these tools? How do I make sure I don't lose my shirt out there?
There are quite a few strategies, but let's start with one of the most fundamental ones, the limit order.
Okay.
Basically, it's like setting up a safety net for your trade. You tell your broker, buy this currency at this price or lower, or sell it at this price or higher. That way, you're not at the mercy of every little market wiggle.
So it's like setting boundaries for myself so I don't make some impulsive decision in the heat of the moment and just lose way more than I planned.
That's exactly it. Limit orders really help you stay disciplined, help you avoid that emotional trading,
Yeah.
which can be really dangerous in Forex.
Okay, makes sense. So limit orders, like my first line of defense. What else is there?
Another powerful tool is hedging. Imagine you're worried that the price of a currency is going to drop.
Right.
Hedging is like taking out an insurance policy on that trade.
Okay, I like where this is going. Tell me more.
So you use something called a futures contract, which is basically an agreement to buy or sell a currency at a specific price on a specific date in the future. That way, even if the market moves against you in the short term, you've got a price locked in, and that protects you from those big, scary losses.
So it's like a backup plan in case things go south.
Exactly.
Okay.
It's a strategy used by a lot of experienced traders to, manage their overall risk and sleep a little better at night.
That's definitely appealing. But hedging, that sounds pretty complicated. Is that something only like seasoned pros should be using?
It is a bit more advanced, yeah. But even if you're not ready to use it yourself, just understanding how it works gives you a deeper understanding of how the whole Forex market operates.
That's a good point, yeah. So limit orders and hedging, those are like my shields, basically,
Right.
in the Forex arena. But are there ever times when I might want to be a little more aggressive, take on more risk for the possibility of bigger rewards?
Well, for the folks who are feeling a little more adventurous, there's always buying on margin. Essentially, it's borrowing money from your broker to buy more currency than you could with your own funds.
Hold on, so I can like amplify my potential gains using borrowed money? That's pretty risky, but also potentially very profitable.
You got it. High risk, high reward. If the market moves the way you want it to, you can make a lot of money. But if it goes against you, you could end up owing more than you put in initially.
I'm definitely sensing the need for caution here.
Yeah.
It's like stepping on the gas pedal, but making sure I've got good brakes too.
Great analogy. Buying on margin is definitely not something to take lightly. You need a plan, you need a deep understanding of the market, and you've got to have a strong stomach.
All right, noted. So it sounds like we've covered a lot, from currency conversion basics to some pretty sophisticated risk management techniques.
We have.
But even with all this knowledge and these safety nets, can't things still go wrong in Forex? I mean, the market's always moving, right?
You're right. Even the most experienced traders can get caught off guard. That's the nature of the beast. And that brings us to this phenomenon called whipsaws.
Whipsaws.
Yeah, those times when the market suddenly, abruptly reverses direction, it leaves a lot of traders scrambling to adjust their strategy.
So a whipsaw is like getting blindsided by a sudden change in the market's mood.
That's a great way to put it. Imagine driving down a straight road and suddenly there's a sharp turn you didn't see coming.
So even if I'm playing it safe, following the rules, managing my risk,
Yeah.
a whipsaw can still like throw me completely off course.
It can happen. But the key is, don't panic. Just like a skilled driver can handle a sudden turn, a seasoned Forex trader knows how to adjust their strategy, and they might even profit from a whipsaw.
Really? Okay, tell me more about that. How do you recover from one of these things? What moves do I need to make?
Well, one strategy is to use what are called offset transactions. You basically make a trade that counteracts the loss you just took from the whipsaw.
Okay, so if the market suddenly moved against me and I lost money, I could make a trade in the opposite direction to try and make up for some of those losses.
Exactly.
Interesting.
It helps you rebalance your portfolio and get back on track.
Okay. But it sounds like timing is everything with these offset transactions. How do you know when to make that move?
That's where your knowledge of market trends and analysis really comes in handy. You need to figure out, was this whipsaw just a temporary blip, or is it a sign of a bigger trend reversal?
So back to the experts and their charts, helping me make sense of the chaos.
You got it. They can help you interpret those sudden movements, help you decide whether it's time to do an offset transaction or just ride out the storm.
All right, so whipsaws, they're part of the game, but there are ways to handle them. Good to know there are strategies for dealing with those unexpected turns.
Yeah, the more you understand these market dynamics, the better you'll be able to handle whatever the Forex world throws at you.
That makes sense. But before we get too deep into those strategies, I think it's time we took a step back and made sure you're fluent in the language of Forex.
That's a good point.
We've been throwing around a lot of terms, so
Yeah, you have.
let's make sure I've got a solid handle on the essential Forex jargon before we move on.
Good idea. A strong vocabulary is key for navigating this world.
Okay, so what are the must-know terms, the words that will help me actually decode what's happening in the market?
All right, let's talk Forex lingo. Now, you might have heard some of these terms before,
Okay.
but understanding how they work specifically in Forex, that's the key.
Hit me with it. What's the first one I absolutely have to master?
Let's start with margin. Remember how we talked about buying on margin?
Yeah.
So margin is that borrowed money you're using to kind of supersize your trades. It's like a lever. It can really magnify your gains, but it can also magnify your losses.
So understanding how much margin I'm using is really important for managing risk. I get why this term keeps popping up. What's next?
All right, next we have spread, which is the difference between the bid price and the ask price of a currency. The bid is what buyers are willing to pay. The ask is what sellers are willing to accept.
Okay, so the spread is like the cost of doing business in Forex. Kind of like a commission.
That's a great way to think about it, yeah.
Yeah.
And here's why it matters to you. Understanding the spread helps you figure out how much profit you could potentially make on each trade.
Right.
The smaller the spread,
Yeah.
the more potential profit you can make.
Got it.
You see?
I'm starting to see how all these pieces fit together. It's like learning a secret code to unlock the potential of this market.
That's a great way to put it. All right, ready for a slightly more advanced term?
Hit me.
Okay, short selling. This is where you're basically betting on a currency to go down in value.
So instead of buying low and selling high, I'm borrowing high and selling low, hoping to buy it back cheaper later on.
Exactly. It's a way to profit from a falling market, but it's definitely riskier. Requires good analysis and timing.
Yeah, I can see why that falls under advanced.
Yeah.
Any other key terms I should be aware of?
One more that's essential, especially for managing risk, and we touched on this a bit before, but it's worth emphasizing the limit order.
Right.
It's like setting a price ceiling or a floor for your trade.
Mm-hmm.
You're basically telling your broker to only execute the trade at a specific price or better.
Right, so it helps me avoid making like those split-second emotional decisions based on market fluctuations. Stay disciplined.
Exactly.
Yeah.
It's a tool for taking emotion out of the equation.
Okay, I feel like I'm starting to speak Forex now. Margin, spread, short selling, limit order, I got it. So now that I'm fluent, any advanced techniques you can share, ones that might help me really capitalize on this market?
There are. Let's start with a technique that sounds really complex, but the concept itself is pretty simple. Arbitrage.
Okay, I've heard that word before, but I'm not sure I totally understand it. Break it down for me.
Arbitrage is basically about exploiting price differences for the same asset in different markets. Remember, Forex is a 245 global market.
Yeah.
Well, sometimes price changes don't happen at the exact same time in every market.
Hold on, so if I'm fast enough, I could actually profit just from that price difference between markets. It's almost like buying something on sale at one store and immediately selling it at full price in another.
You got it. That's
Yeah.
the essence of arbitrage. You're like a financial globetrotter.
That's cool.
Right.
Finding those opportunities and capitalizing on them.
So it's a game of speed and strategy. It is. But it requires you to have a really sharp eye for those discrepancies and the ability to act fast.
Okay, so arbitrage,
Yeah.
speed, and spotting those price gaps. What other What other tricks of the trade should I know about?
Another technique, which can be pretty lucrative but also pretty risky, is capitalizing on volatile exchange rates.
I remember you mentioned this earlier, but I'm still not totally clear on how it works. Can you give me a concrete example?
Sure, let's say there's a currency that's experiencing a lot of ups and downs, maybe because of some political uncertainty or some big economic news. A really experienced Forex trader might buy that currency when its value drops,
Right.
betting that it will rebound soon.
So it's like riding the waves of those volatile swings, buying low and selling high, but on a much faster tempo.
Exactly. But again, it's not for the faint of heart. Requires a deep understanding of the factors that are driving those currency fluctuations, and you got to be a quick decision maker.
Okay, definitely a strategy for those who are comfortable with risk
Yeah.
and know their market analysis.
For sure. It's like surfing, you know? Got to know how to read the waves and got to be ready for a bumpy ride.
I like that analogy. So arbitrage and riding the waves of volatility. Any other advanced techniques I should know about?
Oh, there are tons of strategies out there, but mastering those two is a great starting point for anyone who's really serious about Forex.
Okay, so before we move on, let's do a quick recap of those key takeaways from making profit with Forex trading, just to make sure I'm following along.
Sure.
What are the absolute must-knows for anyone who wants to make sense of the Forex market?
All right, first and foremost, remember Forex is all about currency trading. And it's a 445 global market. This means it's fast-paced, it's dynamic, tons of potential, but it's also inherently risky.
Right, it's not your grandma's stock market.
Exactly. So the second big takeaway is understanding how these currencies are valued and how those values fluctuate is super important. That's where terms like cross rates and pips come in. You got to be able to measure those tiny, tiny changes with a lot of precision.
And don't forget those curveballs governments can throw. You know, with devaluation and revaluation.
Oh, right.
Got to keep an eye on the bigger picture, not just the charts.
Very good point, yeah. And of course, risk management is paramount. We talked about tools like limit orders, hedging. They can really help you protect your investments, make more calculated decisions.
So knowledge is power in Forex, and those tools are like my armor out there.
Exactly. But even with all the preparation in the world, sometimes the market throws a whipsaw, those sudden reversals that can catch anyone off guard.
Right.
But remember, even whipsaws can be navigated if you have the right strategy.
True, true.
You just got to stay calm, assess the situation, and make adjustments.
Okay, I'm feeling a bit more confident about approaching the Forex market, but I know there are other ways to participate in trading besides actively buying and selling currencies myself.
Oh, yeah, for sure. If you prefer a more hands-off approach, or maybe you're not quite ready to jump into active trading, there are options like day trading.
Okay, day trading. I've heard that term a lot, but what exactly is it? And is it something I should be looking into?
Day trading is just what it sounds like, buying and selling assets within a single trading day. The goal is to profit from those short-term price changes. It's fast-paced, potentially lucrative, but also very risky.
And our source actually recommends against day trading for beginners, right?
It does, yeah. Day trading requires a deep understanding of the market. You got to be a really quick decision maker, and you need a high tolerance for risk. It's not something to jump into lightly.
So maybe day trading is a strategy I'll explore once I've got a little more experience under my belt. But what about people who are looking for a more long-term approach, who aren't necessarily chasing those quick profits? Are there options for them in the trading world?
Absolutely. One avenue to consider is investing in secondary markets.
Secondary markets. That's a term I've come across, but I'm not entirely sure what it means. Can you shed some light on that for me?
Sure. Secondary markets involve trading securities that have already been issued in the primary market. Think of it like a marketplace where investors buy and sell existing investments, things like bonds, mortgage-backed securities.
Okay, so it's like a resale market for financial assets.
Exactly. And they play a really vital role in providing liquidity to the whole financial system. It allows investors to easily buy and sell these securities,
Right.
which keeps money flowing and keeps the markets running smoothly.
I think our source mentioned Fannie Mae and Freddie Mac as being major players in this area, right?
They are, yeah, huge players in the secondary mortgage market. They buy mortgages from banks, they package them into securities that are traded on these markets.
So they're like Intermediaries, helping
Yes.
facilitate the flow of funds.
Exactly. And for investors, secondary markets offer a way to potentially profit from the interest payments on those mortgage-backed securities. It's a much more long-term investment strategy compared to, the quick world of day trading or active Forex trading.
So secondary markets are like the tortoises today trading's hair.
I like that.
Slow and steady,
Yeah.
focused on those long-term gains.
That's a great way to put it. And it's important to remember that each approach has its own set of risks and rewards.
Okay, so we've got active Forex trading,
Mm-hmm.
the high-stakes world of day trading,
Right.
and the more measured approach of investing in secondary markets.
Yeah.
It's amazing how diverse the trading landscape really is.
Yeah, it is. Yeah.
But with all these options, it can be hard to know where to start.
You're right. That's why it's so crucial to do your research, understand your own risk tolerance, and pick an approach that really aligns with your financial goals and your personality.
Yeah, I think our deep dive into making profit with Forex trading has given me a much clearer picture of the possibilities.
Good.
But before we wrap things up, I'm curious, what do you think is the most important thing for someone to keep in mind as they kind of start exploring the world of trading? What's that one piece of wisdom you want to impart?
It's funny you should ask that. We've talked about how Forex is influenced by so many factors: economic stuff, political events, news from all over the world.
Right.
So here's something to think about. As you continue to learn and observe this market, how can understanding Forex help you not just make good financial decisions,
Right.
but also understand how interconnected the world really is?
Okay.
It's a window into global dynamics, and the more you learn about it, the more you'll see how seemingly distant events can ripple through these markets and impact your life. It's really fascinating stuff.
That's a great point. It's not just about making money. It's about understanding the forces that shape our world.
Yeah.
Well said. Thanks for joining me on this deep dive into making profit with Forex trading. It's been
a pleasure.
really enlightening. And to all our listeners out there,
Yeah.
keep exploring, keep learning, and remember the world of Forex is full of opportunities for those who are willing to dive in.
Absolutely.
Until next time, happy trading.